Well, let's take a look at how the Kenyan market has fared for this trading day. And of course, we're looking at a market where we've seen profit taking throughout the week. NSE 20 down by 0.7%. Overall, shaving off 152 points this week, and that's where it settles at. Just looking at week turnover, 3.2 billion shillings, and that's versus the 1.5 billion posted the previous week. And of course, lots of trade going through there. And it seems, as I said, profit taking has been the theme of this week. On the currency front, we're looking at that shilling, which is stabilized at 83.8 against the US dollar and sitting pretty flat as it stands this hour. Let's take a look at some of the factors that we've seen driving the overall market. Johnson Nderi, investment analyst at Suntra Investment Bank, joining us from Nairobi. So Johnson, thanks for joining us. What's your view on the weakness we've seen this week? Is there any specific stock that you think is worth pointing out in terms of some of the drivers of the negative momentum?
I wouldn't say I'd pick any specific stock that was driving the market low. I think it's just overall sentiment. I think the interest rate expectations have a big part to play in all this, especially with the government finances out there looking not boosting our confidence in any measure. So there's expectations of probably higher interest rates, which could lead to lower valuations of listed companies, and because of that you might see that either consolidation or a downward trend of shares in the short term on that account.
Now, certainly one of the stocks that has escaped unscathed, Safaricom up 1.5% this week. Now, the telecom space overall accounting for 60% of the week's trade. The stock's trading at 6 shillings 60. There's been some good news about subscriber numbers for the 3 months to the end of last December. Those subscriber numbers, I think, growing there by around 3.1%. So, all in all, a healthy company, and investors certainly coming back and buying the stock, and it's trading above those 5-year highs now.
You mentioned a positive figure, Safaricom, subscriber number growing, but the other drivers probably expectations of performance of M-Shwari, a new product out there that are expected to that could drive revenues up. But Safaricom is about to announce its full year results. Should be doing that. The full year ends in March. The fiscal year ends in March 31st. So you expect to announce maybe perhaps May, June, thereabouts. But largely expectations are May. So investors are taking a position early ahead of the announcement to see if they can catch the pre-announcement euphoria. See if they can capitalize on that. And of course, you've got a good number of foreigners buying into it. Especially if you look at today's trades, and of course they've got lower costs of capital than we do. So because, with that in mind, they are happy. I think they will be happy with the kind of returns they will be able to get with Safaricom. So I think that's one of the drivers that will help drive some of the stocks.
It certainly is an interesting story that came out today, showing that customer cash held by mobile phone companies, all of Kenya's mobile phone companies, makes those telecoms firms Kenya's biggest bank by deposits, with 226 billion shillings in deposits versus KCB with 223 billion shillings. So of course it's not just Safaricom, but overall you're seeing the value of business like M-Pesa, and certainly what it's added to Safaricom. Are you expecting similar growth figures as we've seen in the past few years from M-Pesa this time around?
I think you'll see a normalization of some sort. There will be some drivers, but because of the large nature, the large size of the company, new growth may not necessarily have an impact on the earnings as it used to historically. So whilst you've been seeing growth of 10, 20, maybe 30%, I think the mean over time will start trending downwards, so that you can almost closely mimic the economic growth rate. Because if you look at Safaricom, it's a really huge company in the context of Kenya. As opposed to the banking sector, which which are able to spill over into other countries and pursue growth in those through those areas.
Yeah, I mean, if you're talking about pursuing growth in other countries, you're looking at some of the companies like Kenyan Commercial Bank, which has been, hit on the one hand by the slowdown in the Rwandan economy, where that subsidiary posted losses, and then in South Sudan, where they're really starting to reap the rewards of expanding into that new country, one would say. So do you think from a Kenyan Commercial Bank, they've got that geographic dispersion right now, and of course you think Rwanda will turn around?
Okay, there are two aspects to it. Number one is retention of and positioning yourself as a bank for that anybody who wants to participate regionally can partner with, because you're everywhere. You're in Kenya, Uganda, Tanzania, Rwanda, Burundi, and perhaps even Ethiopia and South Sudan. But Ethiopia, I imagine, will be in the pipeline. So there's that aspect. Then there's the other aspect where you want to pursue the opportunities in Rwanda as well. So I think from the first aspect I mentioned, there's still a lot of sense staying in Rwanda, because you might find that some of the profits being generated in Kenya, Uganda, or Tanzania is as a result of their business from Rwanda. So I think there's long-term, there's sense of staying there long-term. In the short-term, yes, they may be having a couple of challenges here and there, but I expect them to tough it out over there. Whatever they think that they may not have gotten right, they'll just tweak their strategy there and see if they can improve their performance. But generally, I think as a strategic, pursuit, I think Rwanda will remain important, and especially even to launch into DRC if they have those plans in the future, and which they do, because they say they have got Pan-African ambitions.